Welcome back, everyone. Before we dive in, remember we are not financial advisors, and you need to do your own research. We are standing at the cusp of a new era in investment, a time when the boundaries of financial markets are being redrawn. The investment landscape is changing as we speak, with a new breed of assets gaining ground. Yes, we're talking about altcoins. These alternative cryptocurrencies are starting to step out of the shadow of their big brother Bitcoin and are rapidly gaining popularity among investors. But that's not to say that traditional equities are fading into oblivion. Far from it. Stocks, bonds, and mutual funds continue to hold their own, remaining a prominent part of many investment portfolios. Yet the winds of change are blowing, and they're bringing with them a shift in investment trends. As we see the rise of altcoins, we can't help but wonder, what are the forces driving this change? But what are the factors that are fueling this shift? Let's delve into the world of altcoins and traditional equities. Altcoins have been making waves in the financial world, with many seeing significant growth. As we venture further into the 21st century, the world of finance is seeing a new breed of assets making their presence felt. The altcoins. These are not your traditional stocks or bonds, but digital assets powered by blockchain technology. Altcoins, short for alternative coins, are essentially all cryptocurrencies that aren't Bitcoin. And boy, have they been making a splash. From Ethereum, the platform that brought smart contracts into the limelight, to Ripple's XRP, a digital payment protocol, to Litecoin, often considered as silver to Bitcoin's gold, the altcoin universe is vast and varied. It's not just about the diversity though. What's truly fascinating is the technology behind these altcoins. The use of blockchain technology means these assets offer a level of transparency and security that's hard to match. This decentralized nature of altcoins, where no single entity has control, is a big part of their appeal. But perhaps the most enticing aspect of altcoins is their potential for high returns. We've all heard the stories of early investors becoming overnight millionaires. While it's important to remember that these are the exceptions rather than the rule, there's no denying that altcoins have offered returns that traditional assets can only dream of. Take Ethereum, for instance. Launched in 2015, it was worth less than $1 initially. Fast forward to today, and it's worth several $1,000s. That's a staggering increase, dwarfing the returns you'd see on most traditional investments. However, it's not all smooth sailing in the world of altcoins. These digital assets come with their own set of challenges, from regulatory issues to market volatility. And while the potential for high returns is there, so too is the potential for significant losses. Despite the enticing prospects of altcoins, they come with their own set of challenges, which we'll discuss later. But first, let's turn our attention to traditional equities. While altcoins have been stealing the spotlight, traditional equities continue to hold their ground. Now let's delve into the world of traditional equities, a familiar playing field for most investors. Traditional equities, or stocks as we commonly know them, have been a cornerstone of the global financial market for centuries. They represent ownership in a company, and a claim on part of the company's assets and earnings. From the Dutch East India Company's shares in the 17th century to today's tech giants like Apple and Amazon, stocks have been a preferred investment vehicle for many. The appeal of traditional equities lies in their stability. Yes, the stock market has its ups and downs, but historically it's been a steady ship, weathering economic storms and delivering consistent returns over the long term. For instance, the S&P 500, a benchmark index of the US stock market, has delivered an average annual return of around 7% over the past 90 years, adjusted for inflation. Another advantage of traditional equities is their transparency. Companies listed on stock exchanges are required to publish detailed financial statements and are subject to stringent regulatory oversight. This level of transparency can give investors confidence in their investment decisions, knowing they have a clear picture of a company's financial health. Moreover, traditional equities offer tangible benefits like dividends. These are payments made by a corporation to its shareholders, essentially a portion of the company's earnings distributed back to its owners. Dividends can provide a steady income stream, making traditional equities particularly appealing for income-focused investors. But here's the million-dollar question. In a world increasingly dominated by digital currencies, can traditional equities hold their own? Well, they've proven their mettle over the centuries, delivering consistent returns and weathering economic downturns. They offer transparency, regulatory protection, and tangible benefits like dividends. Traditional equities have proven to be a reliable form of investment over the years, but how do they stack up against the new kids on the block? Let's find out. Now that we've looked at both altcoins and traditional equities, it's time to put them head to head. In terms of risk, altcoins are typically more volatile, with prices that can skyrocket or plummet in a matter of hours. Traditional equities, on the other hand, tend to be more stable, with fluctuations that are generally more predictable and less extreme. When we talk about returns, it's a whole different ballgame. Altcoins have the potential for astronomical gains. Some have seen their value increase by thousands of percent in just a few short years. Traditional equities, while they can provide solid returns, usually don't offer the same level of explosive growth. Market capitalization is an interesting point of comparison. While the total market cap of all cryptocurrencies combined has reached impressive heights, it still pales in comparison to the trillions of dollars tied up in traditional equities. However, this gap is closing rapidly as more and more investors turn their attention to crypto. Finally, let's talk about accessibility. With the advent of online exchanges and digital wallets, investing in altcoins has become incredibly easy, even for the average Joe. Traditional equities, while accessible, often require a broker and can be wrapped up in red tape. As we can see, both altcoins and traditional equities have their pros and cons. But what does this mean for you as an investor? Let's wrap things up. In the end, the choice between altcoins and traditional equities boils down to individual investment goals and risk tolerance. We've journeyed through the new era of investment, met new kids on the block, revisited the old guard, and analyzed the differences. Remember, this is not financial advice. It's essential to conduct your own research before jumping into the investment world. And that's a wrap on today's discussion about the rise of altcoins and traditional equities. Thanks for watching. Don't forget to like, comment, and subscribe. And hit that bell notification so you'll be updated anytime we upload a new video.